Hello and welcome to Schwab Coaching. Everyone, my name is Cameron May. It's 2 o'clock Eastern Standard Time on a Tuesday afternoon. That means that it's time to get into this brand new series called Getting Started with Technical Analysis. It's the big day for me, hopefully a big day for you. We're going to be exploring all about using charts to plan a stock trade. So if you've ever looked at, another trader's computer and thought, what is it that they're looking at in order to plan their position? That's what we're going to be exploring today. We're going all the way from, over the course of 8 lessons, we're going to be going through setting that chart up all the way through to having a written plan for the administration of a stock trade using charts. So I'm looking forward to it. Let's dive into it. The very first thing that we always need to do is pause to consider the risks associated with investing. So please remember the information here is for general informational purposes only, should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. While this webcast discusses technical analysis, other approaches, including fundamental analysis, may assert very different views, and we should always be aware that investing involves risks, and that includes the risk of a loss, all right? So what is this series going to look like? I hinted that we have a series of lessons that are coming up. Yes, we're going to be spending the next 8 weeks every Tuesday, 2 o'clock Eastern Standard Time. We're going to take 45 minutes and explore this world of using charts to plan stock trades. So I want to start at a pace and maintain a pace that everyone can follow. Now, that doesn't just mean that this is exclusively for beginners. We are going to be going at sort of a beginner level, but I think there's going to be good reminders of important concepts for those who are experienced. And I do need to, your experience here is always appreciated with your comments in the chat. So thank you for being here. But we're going to kick things off with lesson 1 today, an introduction to technical analysis. Then we're going to be exploring how to set up charts and how to understand those. We're going to get into trend identification in lesson 3, support and resistance, which is examining price floors and price ceilings. In lesson 4, then using technical indicators, all those fancy tools that you might see applied to a technician's chart. In lesson 5, then diving into entries and exit signals on a chart. Lesson 6, price patterns in lesson 7, and then an investing plan in lesson 8. You might think, okay, so then we're done. Then we know everything about the world of technical analysis. No, I think this is going to be a great way to set the stage for a continuation of this series where we will just explore other concepts beyond these lessons as the series advances. So really looking forward to it. So let's talk about what we are going to be discussing today specifically. So on today's agenda, first of all, just exactly what is technical analysis and why do some people choose to use that in the administration of their self-directed portfolio? And that's going to be built upon some basic principles of technical analysis. And once we understand those principles, we're going to go to charts and we're going to get things set up. And we're going to explore an example list of priorities that a trader might use as they begin to plan a stock trade using charts. Okay. Elizabeth says you look forward to this very much. I'm glad you're here, Elizabeth. I like keeping an eye on those the chats that are coming in on YouTube. I see a lot of familiar names out there. Great to see so many familiar friends, and I would say faces, but friends, we'll call it that. And there's a whole new audience of new attendees. Welcome. Hope you enjoy the webcast. But let's talk first of all about the goals of technical analysis. When a technician brings up a chart, and you'll hear me use that phrase, technician, that just means someone who uses charts to plan investments or trades. Okay, but there are basically 2 potential approaches to planning an investment. Now, one actually employs the usage of charts, and another one actually does not. So let's talk about technical analysis, or you'll hear me refer to technicians. That is, it's the study of historical price and volume to identify and project price trend on a chart. So for a technician, they see potential value in that if they can establish where the trend has been, where they seem to be within that trend. Maybe they can gain some insight into where that price trend might go next, and hopefully lead to an enhancement of portfolio performance. That's the objective there. But it is all built around observations of price movements on a chart, supplemented with volume. Now, there's another potential school of thought, and it's known as fundamental analysis. Now, how many of you are comfortable with the distinction between technical analysis and fundamental analysis? Technical analysis uses charts. Fundamental analysis actually explores the company behind the chart. So instead of looking at the stock, we're looking at the company behind the stock. And those that employ fundamental analysis are really analyzing a company's financial statements and scouring those balance sheets and some income statements. And they're looking for maybe value opportunities or growth opportunities, but they're really looking at the performance metrics of the company behind the stock. So does that mean that because I'm teaching a webcast series, it's all about technical analysis, that I'm promoting technical analysis as the only potential approach to investing? Of course not. Nope. No, for some, they prefer charting. For others, they prefer technical or fundamental analysis. And others will actually mesh or marry those two together in their approach. Okay. But we're going to focus on how technical analysis might be accomplished. So it really is built on some basic tenets, 3 basic tenets of technical analysis, or assumptions that we might say about technical analysis. Number 1 is that prices tend to move in trends. They might trend up, they might trend down, they might trend sideways. Now, I don't like to use too much what I'd call broker speak when we're talking on the getting started basis. So when you hear me use the word bullish, it means up on a price trend. When you hear me use the word bearish, it means down on a price trend. And really those stem from, if you don't know where bullish and bearish comes from, it just comes from the way that that animal essentially attacks. A bull, if you think about it this way, swipes its horns upward. A bear swipes its paw downward as it attacks. But if that's useful to you in understanding what I'm talking about when I'm talking about bullish or bearish movements on a chart, there we go. Now, another assumption in technical analysis and charting is that the market discounts everything. There's a bit of a word that could have a different implication than what is intended here. When I discount something, that might mean that I'm dismissive of it. No, what that means in this context is that it is inclusive of that thing. So when we say the market discounts everything, it means that the current price includes, this is the assumption of this, it includes all of those fundamental variables that might be contributing to price movement. Okay, let me say that a different way, right? When we see a stock price going up, well, we might think, well, what's included in that price going up? Does that price know about the great earnings report that was just had? Does it know about the change in CEO? Does it know about the earnings over the last 5 years? Those are all fundamental metrics. And the assumption of technical analysis is that the collective wisdom of investors in that security already take that into account. And that's built into that price activity. So price moves in trends. And it essentially includes every discoverable fact out there about the company behind the stock. Now, these are assumptions. Assumptions are not always entirely accurate, right? But a final assumption with technical analysis is that history repeats itself, or that it frequently looks similar to previous historical movements, okay? And that's just based on the assumption that humans as a group tend to react similarly in similar scenarios. So when there's panic, how do humans as a group tend to react regarding the shares that they own? Maybe they sell. When there's overconfidence, maybe they buy at an accelerated rate. There's just that common thread running through the assumption of technical analysis that as a group, humans should behave relatively similar now under similar market conditions to what they've done in the past. Does it always play out? Of course not. All right, so those are the basic assumptions of technical analysis. What are some of the benefits and the risks of technical analysis? Well, potential benefits of using a chart to plan a trade. Some people find looking at the chart with trends and support and resistance, that's price floors and price ceilings, as relatively intuitive. They see it maybe as a potential shortcut to doing additional research into the company behind the scenes, okay? Number 2, technical analysis is flexible and it can be applied in any market condition. So whether an investor sees a bull market and they're trying to plan trades that benefit if stock prices rise, or if they see a bear market and they plan trades that benefit if prices fall, or even if they're going sideways. Technical analysis conceptually can be applied under each of those conditions. And technical analysis is universal. It can be applied to a range of financial markets. So in this webcast series, we're going to talk about basically planning stock trades. But can these same technical principles be used to plan for other approaches to investment if we're looking for diversification in our portfolio beyond just stocks? Sure, it could be. Now, and in none of those scenarios is technical analysis a guarantee of performance, but the concepts generally are pretty universally applicable. So that's the fun part. It's nice to talk about the pros of an approach. What about the potential risks? Well, how many of you can admit to this? Humans have a cognitive bias. We have a bias when we look at a chart, when we engage in whatever activity, and that can lead to poor decisions. How often do we come to a chart? We want to invest, and so therefore we see what we want to see on that chart. And then you bring another technician into the scenario, and they don't want to invest, and they may see the same chart through an entirely different lens. That's because they're bringing their own cognitive, in other words, the way they think about things, bias to that chart. Another consideration is we get things wrong. Slippage is just the risk that a securities price will move more than you've accounted for in one direction or the other. Yep, sometimes we're just wrong. We don't anticipate the volatility or the direction correctly. Now, a third thing, and this can contribute to that cognitive bias, but that is when we apply the identification of trends to a chart. Sometimes we can fool ourselves into thinking that we're really good at spotting trends just because they're easy to see in hindsight, and I think I have a good example prepared of that today. But how often have you looked back in the past and you say, oh, I could have done that. If only I'd known how to analyze charts. That's obvious in hindsight. Hindsight provides that 20/20 vision that we need to try to include in our understanding ourselves when we're trying to apply technical analysis. We don't always get things right at the time. Okay, and finally, technical analysis is open to subjectivity as it requires discretion to interpret. Yep. Sometimes I will be sitting down with another technician who has similar levels of experience and competency with analysis on a chart that maybe I consider myself to have. And we look at the same chart and we come to different conclusions. That's inherent to technical analysis. There's discretion. Now, that discretion does make some investors squeamish. Others have confidence. They like to apply that discretion. So there are two basic approaches. As we start to prepare ourselves for learning about technical analysis, you should know that for some technicians, they like to use that discretion. They rely heavily on their own ability to read a chart and the price action on that chart. Now, that obviously may take some experience to get to a level of comfort of that with that. And for some, they just decide, you know what, even if I feel comfortable, I prefer not to do things manually. I prefer not to apply my own discretion. But regarding discretion, this does require human interpretation. It can incorporate additional information, which can be good or bad, and it can include our own bias. Now, a discretionary approach to technical analysis can be difficult for others to replicate. Now, for some, they see that as an insulation against, hey, nobody else knows my approach, and therefore it makes me unique, and they see strength in that. For others, though, they see, if it's difficult for others to replicate, am I doing something wrong? Am I misinterpreting things? Okay, yeah. So throughout this webcast series, I'm going to highlight there are different approaches. We can automate things sometimes. At other times, we might use our own discretion. Now, there is that generally non-discretionary approach, which relies on computer-generated signals. I think a lot of you have looked at others' charts, and you've seen all these colorful little lines that are drawn on the chart, little gizmos down at the bottom of the chart. And you recognize, hey, they're using some tools. What are those tools? What are those indicators? What are those studies? Those are the phrases that we use. But these generate automated signals that don't require human interpretation, and that signal might be something like the signal price crossing up through a threshold. That could be an automated signal as an example. This is a very methodical approach. It removes human bias, but it's not perfect. It doesn't adjust for nuances or rare circumstances. But it does make it so that for other traders, it might be easier to replicate that sort of approach. There are pros and cons to these, and we'll just build that into our discussion as we move through the weeks, okay? But finally, what we're ultimately working toward as we move through these 8 lessons is for the investor who has completed the 8 lessons to feel comfortable constructing their own example investing plan. That's a set of written rules that govern whether a trader takes a position or not, and if they do, how much they commit to, when they want to buy, and when they want to sell. So a typical trading plan, and we are going to dedicate lesson number 8 to this, but a typical trading plan might include the following things. Watch list criteria. That means what kinds of stocks we might be interested in buying. What to trade. Entry signals. Money management techniques. How much are we going to commit to each individual position? Exit signals. And then having routines to look back over the approach that we're taking. So maybe on a quarterly basis, is this working or is it not? And if it's struggling, how might I improve it? If it's working, how might we refine that approach? So always working to improve that plan. But yeah, by the time we're done, lesson 8, we're actually going to show an example investing plan. So let's get right into now charting. Okay. Now in this webcast series, I am going to be using the thinkorswim trading platform. And I realize that just this week, we're kicking off exposure to thinkorswim to a lot of you out there. I did a webcast just yesterday where I introduced this, but I'm going to do it again just to make sure that everybody here, we're going at a beginner level. Hopefully everybody can follow. So this software that we're going to be using, it is called thinkorswim. It can be downloaded free of charge from your Charles Schwab account, right? Schwab.com. And the way to access that is you go right up to your trade tab. And we're going to go right here under trading platforms, click on thinkorswim desktop. And right here, you just can't miss it. It's going to guide you through that process, learn how to enable thinkorswim. You'll just click right there and just follow the on-screen prompts. And that's going to help you. It's going to assist you in downloading this trading software that we're going to be using through the rest of this presentation and through the remainder of our lessons. Okay. But once you've downloaded that, it's going to create an icon on your computer's desktop. It looks like a little splash, little blue splash. And you'll launch using that icon or from your computer start menu. But it's immediately going to prompt you for a username and a password. And you might hit the panic button. Oh, no, I don't have a username and password for thinkorswim. Yes, you do. It's just your Schwab user ID and password. So log in. And as you log in, it'll also ask you, well, do you want to log into your live accounts? Or do you want to log into paper money, which is the practice version of thinkorswim? And what I would suggest is, as you're getting acquainted with the software, use the practice version. That way, there's no risk. You hit the wrong button, place a trade you didn't want, take a larger risk than you intended. Maybe you're just experimenting with a new tool and you don't want to have to worry about, is there that remote risk that I do something wrong? There's even a reset button within the paper money. But once you've logged in, you're going to find yourself on a platform that looks very much like this. Raj says, is there a tool on TOS or Schwab that allow to log all trades? There is a function like that. I'll probably get to that, Raj, in my other webcast series, getting started with thinkorswim. But in this one, let's focus on our charts. So I'm going to pop right up here on the platform, and I'm going to click on charts. Okay. And now let's go through the basic setup. So if you're trying to replicate this, like if you're watching the live stream and you're trying to follow along, or if you're watching afterward on the recording and you're trying to follow along, it can sometimes be frustrating if your screen looks a little different than the presenter's screen. Okay. So how about for today, let's use our example symbol meta platforms. META is the chart symbol. So I'm going to type that up here in the upper left. And what you will see, and your screen might not look exactly the same, is that by default, mine is on a 1 year, stretching back to last year, candlestick chart with no other stuff on it. Okay. So let me just show you how to set it up so it looks kind of like mine. First of all, let's make sure that that we're on a candle chart, because there's the possibility that you might have defaulted to a line chart. We'll talk about the difference between those two in an upcoming webcast, because it is an essential element of technical analysis. But let's make sure that we're on the correct style. So if we come over here to style, I have a candlestick style of chart. You'll notice my chart type says candle. Yours might have defaulted to something like a line chart. So we'll set this to chart type candle. Now, the next thing is that if you happen to be on some other time frame of chart, a weekly chart, an hourly chart, we can change those time frames right up here by clicking on time frame setup. Now, whatever setup we happen to be on, if I were on a weekly chart, this would be a W. If I were on an hourly chart, it would be an H. So I want to set this to a daily chart. So I can click on this. We get a menu of different time frames that we can choose, and just make sure that we've selected 1 year, 1 day. If it's not your default, it's going to be down here a little bit lower. Okay. So once we set that to 1 year, 1 day, we're starting to look very much like this chart. A couple of other customizations that I might make. One thing that I like to use here in my webcast is some extra space off to the right of my chart. So you'll notice right now, price is running into the y-axis over here on the right, the right margin. I want some extra space out there. So if we do some drawings and we apply some studies, it allows us to envision the future maybe a little bit with a little bit more clarity. So to get that extra space, I'm going to come down here. You see the little double-headed arrow? Kind of implies that we can expand things, right? So those are our right expansion settings. I'm going to click on that. And how about we change those right expansion settings to 10? There we go. Now let's click apply. So when it says 10 bars to the right, a bar simply refers to the number of days or the number of weeks, the number of hours, depending on what chart time frame we're using. But let's click apply and click OK. And now what we see is we now have 10 blank spots for more candles. So for a technical investor, a technical trader, that can be important to me. If we need more space, we could do that. Okay. But that, we'll just set it at 10 for now. Now, a final thing is you do notice if you're looking at your chart, there are no icons across the bottom. There's also no volume down here. I've cleaned up the chart just for a very clear view of our charts. Okay. If yours happens to have volume, we can toggle the volume on and off, and we can toggle the other event icons on and off using the chart settings icon right up here. So this little gear, when you see a gear on thinkorswim, it means something can be customized. So I'm going to click on that chart settings icon. And if let's say I wanted to remove the volume from my equities charts, I could go to equities. And right here, you'll notice it says show volume subgraph. If that were checked, you'd see my volume on my chart. I'm going to uncheck that box and click apply, and it removes volume for now. There'll be times when we use volume, so you'll see me add that back in. The other thing is if you don't want to see things like an earnings prompt or a dividend prompt, events icons on your chart, there's a box right here, again, under equities, for show corporate actions. Corporate actions are that's a generic term for when a corporation takes an action that might affect its price on its stock. Okay. So things like dividends, things like earnings announcements. If we were to check that, click apply, you'll see these icons appear that represent, this one would be an earnings announcement. For now, I'm going to keep it clean. Uncheck that box, click apply, click OK. So that seems like a lot, but all we did was, change the style if needed, change the time frame if needed, added a little space, and then the rest, it's all optional. Okay, so now that we have our chart all set up, and by the way, we're going to have an entire webcast dedicated to understanding charts, basic charts, in our next discussion. I want to start talking about, here's a brand new fresh chart on Meta. And I have a question for you. For those who have been using technical analysis in the past, who are familiar with the concept of using charts to plan stock trades, let's set up an example list of priorities that an investor or a trader might work through as they start with a brand new fresh stock chart, and they're working toward having a complete plan for an investment or a trade in that stock. What is the very first priority that you might look for? What's the first thing you might want to establish when you're looking at a brand new fresh chart? Maybe it's a familiar chart you haven't seen in a while, or it's a chart you've never seen. Okay. What might be the very first thing that your eyes go to? I ask this because I suspect the answer is going to be the same for a lot of people out there. I can't speak for everybody, but let's come over here to our scratch pad, and then as those answers come in, let's outline an example chart priorities. Okay. Karen says, what's that trend? All right. Chris Clark, trend. Chris B, trend. Chena, trend. Interesting. So that's interesting that so many are commenting in right now, and they're saying, well, when I look at the brand new chart, first thing I'm looking for is the trend. Why do they care? Well, as I mentioned in those tenets of technical analysis, trend is a high priority for a number of technical investors and traders. If they're, if I explain it this way, let's suppose that we're really good at charting, and we're trying to put together a bunch of bearish trades, but the trend of the S&P, the trend of so many stocks out there is persistently bullish. What's probably happening with the likelihood of success, no matter how experienced we are with technical indicators, with candlesticks, and all the other nifty gadgets that are available on a chart? We're quite likely, conceptually, to fail if those trends persist. So yes, establishing that trend might be the first priority. So next question, what does that trend look like it is currently to you? Let me just let that sit for just a moment. Chat in. What do you think? Bullish, bearish, or sideways? Kind of depends on one's time frame, doesn't it? But I'm going to make a quick argument here. Just a quick observation. We'll work on getting better at trend analysis in an upcoming webcast. If this is so important to so many, how is it done? Great question. But some of you might look at this and say, well, going from left to right, from where we were to where we are right now, that appears to be an upward trend. But others might say, yeah, well, it has been upward. I'm getting fancy and using some drawing tools some of you might not be familiar with. I'll show you how to use them in just a moment, okay? But some of you might say, well, yeah, it wasn't an upward trend. It was coming up, but then it started to move sideways, right? So you might say, was an upward trend, now sideways. Which one of those is a potentially tradable scenario? Well, to some traders, might be either one. An uptrend can be tradable, a sideways trend can be tradable, but it may affect the timing for the approach to the investment. But now that I've drawn some trend, very basic analysis here, I did use some drawing tools that are not going to be familiar to those of you who have not used thinkorswim before. So here's how you do those drawings. So right down here in the lower right, you can choose from all sorts of different drawing tools. We can draw ovals, put text notes on the screen. What I'm using is called the trend line tool. And by default, when we draw a line, it'll make this thin line. And to draw a line, we just go to wherever we want to start the line. We click once, move to wherever we want to end the line, and click again. That's it. So it's two separate clicks. It's not a click and drag. Now, once we have drawn a line, though, we can actually change its properties. For example, as a presenter, I know that a little thin line here moving up through our trend is kind of difficult to see somewhat. So what you'll see me use more frequently is a thick dashed blue line rather than a thin, solid black line. So here's what I do. Right click, once we've drawn a line, right click on that and edit the properties of that line. So I'm going to change this line to a blue line. Let's make it a dashed line under style, and let's give it a width or a thickness from a scale of 1 to 5. I'm going to crank it all the way up to a 5. And so I could click OK, and that would change this one line, but I'm actually going to save this as a default. save as a default, and I never have to do that again. As soon as I click OK, now you'll see this line that we were already editing has been changed. But also now any other line that I draw is a thick dashed blue line. Okay. So let's just quickly right click on one of those lines. We can remove it, or we can right click on a line and clear the whole drawing set. That just gets rid of everything on our chart. But let's start with a nice fresh chart again. And let's draw in maybe what we consider to be, well, actually, let's just leave it nice and clean. I like a nice clean chart. Let's leave it nice and clean and move on to our next item in our list of priorities. So again, I'm leaning on those who are a little bit more veteran with chart usage. Once you have established where you think trend is currently, what's the next potential consideration? And if I throw this out there as kind of a hint or a clue, within an established trend, some traders recognize, some might just say, you know what, trend is up, I'm buying. But for others, they look and they'll say, well, whatever that current trend is, even within that trend, even within, let's say an upward trend, there may be better times to buy than other times. Within an upward trend, are we looking more to buy at short-term lows or short-term highs? If price moves higher, may not matter very much in the long run, but it could help a little bit in the near term, right? Yeah, so what a lot of you are saying now, Chris, support and resistance. Gary's saying resistance and support. Kevin, resistance and support. Those are going to be new terms to some people in this audience. What are we talking about with resistance and support? Well, within an established trend, so here we had an upward trend, it's gone sideways. But you may notice that within the upward trend, there seems to be a floor to prices and maybe even a ceiling to prices, right? Within a sideways trend, we can get those ceilings and those floors. And that's just a reflection of the fact that a price very rarely tends to just go straight up. It can for a period of time, but it doesn't tend to last very long. Even if it's persistently bullish, or if we're going sideways, we don't tend to just go straight sideways, but instead there tends to be a stair-stepping effect, an ebb and a flow, right? And so within an upward trend, maybe our investors are looking to buy in when we're closer to those lows. And within a sideways trend, we might be looking to do the same, buying in when we are at or near those price floors. So now in technical jargon, we have a name for these. We refer to these price floors as support, because it seems, well, this is the way that I think about it. It seems as though there's an invisible hand that's applying pressure from the bottom that's preventing the stock price from going lower than that price floor, right? It's being supported from below. Now, to the opposite extent, we'll sometimes refer to a price ceiling as resistance, because additional advances in prices appear to be resisted. Now, really what's going on here is just basically buying and selling. There are maybe more buyers down at floors, more sellers up at ceilings. But in any case, for that technically oriented investor, it might be important to develop some skill in identifying floors, even within established trends. So yes, support and resistance may be priority number 2. So guess what we're going to make sure that we cover in our series? Trend, absolutely. We're going to dedicate a lesson to it. Support and resistance, that's going to be its own standalone lesson. What about our third priority? Okay, I have to emphasize, not everybody does this in exactly this way. Okay? Not everybody is going to bring up a chart and they're going to say, okay, first of all, let's identify the trend. Second of all, let's identify support and resistance. But there's a good category of technical traders who will go through a process quite similar to this. But for some, they might say, okay, we got the trend, we found the floor, buying. For others, though, they might want a little additional evidence to support the decision that they think they're about to make. They might be looking at this and say, we have this stock that's been moving higher. it's come down to an apparent trend floor, might be time to buy, but I wonder if there's some other evidence that we could recruit. And this is where they might bring in other indicators, okay? So sometimes you'll hear us refer to the tools that are applied to a chart as indicators. Sometimes you'll hear them referred to as studies. But yeah, Jonathan, we start to add those indicators in. So, in recognition, let me just quickly throw one on here as an example, all right? There's actually a category. There are lots of indicators, actually hundreds of them out there. But what you'll discover is that their indicators are kind of like going to the gym. You have your cardio equipment and you have your strength equipment. With indicators, they'll very commonly have trend indicators, and then they'll have support and resistance or momentum indicators. So there's a general category of indicators that are known as oscillators. They're indicators that oscillate up and down within a range. Sometimes they're high, sometimes they're low. And the general implication of those indicators is that when they are low and starting to rise, it might be a sign that the momentum of the stock, as it's making its way through highs and lows, through these stair-stepping patterns that we've seen on this chart and others, that the price itself might be at or near a low, and maybe it's starting to rise. So I've been talking about it. Mike says your weakness is reading charts. Well, hopefully this series will help you with that, Mike. That's definitely my objective here. But let's pop up here to this little beaker icon. We're going to do a little bit of, you might call it a science experiment. Yes, these are built on some formulas. Are they guaranteed? Nope, none of these are guaranteed. But let's click on the little flask icon. And as we do that, we're going to see a menu of potential technical tools that might be applied to the chart. Can't show you them all. Nope. But let's just do a quick review. Let's do an introduction to one. How about the MACD histogram? MACD, it's an acronym. It's a bit of a mouthful. Stands for moving average, convergent, divergent. And then you throw on histogram. It sounds like quite a bit. Let me show it to you. I'm not going to get into how it's built today. That'd be a little bit too heavy lifting. But let's add that. So are you noticing how we're adding this? We'd go up to the little beaker icon. We could go down in alphabetical order if we know what we're looking for, or we can just type in a keyword search. Okay, so I'm going to type in MACD and choose MACD histogram. Add that to our chart. That prepares it to be added to our lower chart or below the chart, and we'll click apply. And what we're left with as we click OK is this series of green mountains and red valleys, peaks and troughs. And for an oscillator using technician who uses MACD in the planning of a stock trade, they might go through this sort of a process. They look for the trend. All right, we have an upward trending stock or a sideways trending stock. In either of those, they might think, well, that's okay for trading a stock for at least a period of time. Within either one of those, they might be looking to buy at or near lows. And so they might be looking to see, okay, are we down? Looks like here, recent support might be around 280 bucks, right? So a bit more confident that price is likely to rise again. Is it a guarantee? Of course not, right? But you can see some previous events. Here was an example signal. Here was an example signal. There was one here and one here. So maybe a confirmation of a potential entry right there or right here. There was a deeper dive right there within an uptrend right here or right here. But that's just a brief introduction to a technical tool that might be used. But yes, within this process, for some technicians, trend, support and resistance, and then indicators. Okay, looks like we had a little bit of buffering, but we're back. Okay, yeah, and if you need to, thank you for the suggestion there, Noel. Just refresh your page and kick the video back up to speed. But finally, for some technicians, that might be enough. Again, we're building evidence for the planning of a stock trade. And for some, they might say trend is good, support and resistance, where it looks like we're near support. Maybe our oscillator is doing what we would hope it do, time to pull the trigger. But for others, they might look to get even more precise. Well, what is price itself doing? Is it actually starting to move back up off that floor. Just because the oscillator is moving, that might not be quite enough evidence. So they might actually look to the individual candles. And they might, for example, look for a white candle, which is an indication that price is rising at least from the day's low and starting to go back up again. Okay. So our fourth potential priority might be candles. So this is an example process that some might apply. And I know that you're probably saying, well, Cameron, that sounds nifty, but I don't know how to do this yet. I know you seem to draw those lines on there very confidently. You seem to know what you're talking about with an indicator. Yep, we need to do some learning. So we're going to dedicate future lessons to these objectives, to learn more about these. Okay, but with this, I've actually accomplished what I wanted to set out to do today. When we kicked things off, we wanted to give an introduction to what technical analysis is and why it might be used. We talked through the principles of technical analysis, some of those basic tenets, and I provided an introduction to charts, setting up the charts, and just a basic high-level overview of the sort of a process that a technical trader might move through as they're planning a trade. Now, that's to set the stage for maybe when to buy. We obviously need to talk about when to sell. Still a lot to talk about. So I hope that you'll be joining me in future lessons. But I do have some suggestions for you as we wrap things up today. Number one is that if you're just getting comfortable with the navigation of this new series of webcasts, make sure that you're going to schwab.com/coaching or Schwab-coaching, and you can see that lineup of webcasts. So here's today. We can see all of the events for the day. And you can see that we have a lineup of events every day of the week. I think this is fabulous. Also, if you haven't subscribed to Trader Talks webcasts from Schwab Coaching, please do that. Go to YouTube, find Trader Talks webcasts from Schwab Coaching. This is where you're going to find the archives for the webcasts that have already been delivered. So you can go right to our homepage, find those down below. You can also go to the playlists. If you're wondering, hey, Cameron, where did your webcast wind up from yesterday? You're going to find that right on this page. Okay. Ken, you enjoy how progressively logical your instructions are? Well, that's good. Thank you, Ken. I appreciate that. All right. Yeah, well, finally, yeah, Ken, if you enjoy the way I do things, and if you want to connect with me in between these webcasts, make sure that you're following me on the platform previously known as Twitter. Now it's known as X. My handle there, you've seen it down in the bar at the bottom of the screen, but it's at Cameron May CS for Charles Schwab. I'm very active on that platform. It's where you can get my thoughts on market developments and what I'm doing on the weekend and all kinds of things. If you reply to me on one of my posts on X, I try to reply right back to you. It's a fabulous resource. But guys, it is time for me to let you go. We've accomplished what we set out to do today. I do have suggestions for what to do now to have us ready for next Tuesday's discussion. Make sure that you're comfortable, that you're starting to get comfortable with thinkorswim. So I've shown you how to set up those charts. Go download the software and you can set up those charts. The next webcast to join, we're going to continue the series with getting started with technical analysis. We're going to be talking about basic elements of charts. Just, what a line chart is, candlestick chart, what are candles, what are price bars, all of those kinds of things. And we have additional resources. You can learn more about technical analysis in something called the Schwab Learning Center. Just go to schwab.com and throw in that /learning center, and you'll see a menu. You can find some information learning more about technical analysis right from the drop down within that menu. Okay. Everybody, thank you for giving me your time today. It's always my pleasure to be your presenter. I'm really looking forward to this webcast series. Bring along a friend if they'd like to learn more about technical analysis, but it is time for me to let you go. Just remember, as we go, risks are real. We did use real examples in today's discussion. It's not a recommendation or endorsement of those securities or those strategies. I'll see you next Tuesday or in another webcast between now and then. I'll also look for you on X. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.